Hello, and welcome to Supply Chain Next. I'm your host, Richard Donaldson. Join me as we explore the ongoing evolution of supply chain, from the challenges practitioners face every day to the ongoing digital transformation of the entire value network. And welcome to the next episode of Supply Chain Next. And super excited here to have my guest, Humberto Olivo. Humberto, welcome to the program, and really glad to have you here today.
Thank you, Richard. Thank you for having me, and really happy to talk about these exciting times and interesting things going on.
Well, and I think people can tell from your accent, you might have some international flair in the background there, and then that contrasts with your emblem of Innovation, Texas. So would love to just start with a little bit about yourself and kind of who you are and where you came from.
Sure. So again, my name is Humberto. I was born in Mexico City. Mm-hmm. But I was, since I was a little kid, traveling all over the world with my parents. Then fast forward, I went to study economics. Then I was living in Manchester in England, where I got my master in international finance. Mm-hmm. And then professional life, I was working for Citibank in New York. Mm-hmm. I was, for some years, involved in investment banking. And then I went to the dark side, to the trading side of it. So I was head of trading in the New York desk. And then for some years, and then moved to Santander, mm-hmm. where I was head of investment banking at Santander. So I guess that gave me a really interesting perspective on many industries and many different changes at that moment. And we're talking about the 1990s, more or less. And then I moved to Texas, to San Antonio. Mm-hmm. I started with a couple of partners, a venture capital firm, private equity venture capital firm. Mm-hmm. And that's where we started getting involved in, clean energy or renewable energy, mainly solar, mm-hmm. And then tech around the energy and clean energy. And then eventually I was involved with some projects in Northern Europe around the same thing, energy, mm-hmm. And technology. And that took me to, which is now Cleantech and the circular economy and deep tech, which I think it's really exciting. And this is, something that's getting a lot of traction post-COVID, or as we get out of the pandemic. So,
absolutely. And let me jump in on that one, because I think it's a really interesting, and as a former investment banker myself, but you were in it a lot longer than I was. You really kind of spanned the banking spectrum from commercial to investment, trading all in there, in that looks like 15, 16, 17 year kind of time frame, which is, a career unto itself. Did you ever envision yourself moving into clean tech and alternative energies, or how did that happen? I mean, that's not a transition. And investments, I get. Moving to private equity and venture capital, that's kind of the, right. fairly typical, cross-pollination between bankers and VC and private equity. But then you went even further, and in the 90s, no less, which clean tech and all that stuff wasn't really nearly as popular as it is now. So walk through that. How did you go from banking to kind of get into investments and then into the clean tech world?
Well, when I got to Texas, to San Antonio, I started, we started this private equity venture capital firm. And for some reason, we started getting, I guess, a couple of pitches around solar energy.
And this is in the 90s?
This is 95-ish, more or less.
Okay.
Which was, really
early,
super early. And I got really excited to see how that will eventually disrupt certain industries. Obviously, had no idea it was going to be that strong and that big of a shift. Mm-hmm. And so I started, trying to learn a lot about the technologies and how solar could be, or could start changing some of the industries. Mm-hmm. We invested in a small startup that went really bad. But it was a good, I would say, education for me in terms of renewable energy at that time. And so we kept investing in the traditional, industries, health tech. That was when we got the shift towards electronic, all the electronic health. But I was always really close to solar and how that was evolving. And then you had the solar city evolving in California and all that.
Totally.
And so I was always really close to, I would say, clean energy.
Okay.
And then with some of the connections I have in Northern Europe, got into wind. And then Texas obviously started getting into wind power. And I guess after wind power, you started seeing, solar farms popping up all over Texas. And then it started to make sense. So it was, that's when at least I knew it was going to be a really powerful thing. So I started getting more and more involved, both in, investing, learning, the technology around that, because obviously you have the technology around, say, the solar panel, for example, but how does that connect to the whole grid? And then that's when, we started talking about the smart grid and how will that change the whole system. And next, it's 2018.
Right.
We're working a lot on clean energy, clean tech, the smart grid, and all the new technologies like, AI, blockchain. How is that getting into the decentralized grid? Right?
Well, and building on that, so, and sort of recapping a little bit. So kind of your initial pull into kind of the clean tech world was solar, which, by the way, mirrors, I think, where most people have been playing for a long time is in solar. Go back to the 80s and the 90s, and really the only things that people had in front of them was solar energy, and people have been playing with that for a while because that goes back decades. Wind energy has been there for a long time, again, going back decades. Kind of your usual suspects, right? Solar and wind, let's say. But then, as you sort of remark here, is that was still early, very, very early days. And then you started to see a proliferation of a re-emergence or resurgence of solar and wind, with now the economics behind it and the business models behind them to actually make sense. Where early on it was a little bit more feel good, but the business models weren't quite there. The margins weren't quite there. Something shifted in kind of the later 2000s. Now I personally would tie it to the rise of a lot of the data center movement and infrastructure movement in internet, because those people were at the vanguard. This is my former life, but those people, Google and Microsoft, were looking at renewables very early on because of the energy consumptions in data centers. So they really started spending money. Therefore, these companies could make money doing solar. That doesn't mean they weren't building on their own. And I'm not saying that's the only reason but from your perspective, what changed somewhere in there? What changed in the 2000s? Like something happened where all of a sudden now solar and wind were no longer, they actually were economically viable, real businesses were emerging, but then that sort of gave birth to this, now there's a whole ton of stuff. Now you can't go there's tons of business models with all sorts of really cool alternative energies, but kind of the grandfathers were solar and wind, and then that sort of gave way to a wider aperture or appetite for more renewables.
Right. Yeah, I remember it was 2005. I was in San Antonio and I got this, CPS Energy, which is the largest municipality-owned utility in the US. So I got this in the mail saying, well, would you like to, shift to clean energy, to renewable energy? That was the term was renewable energy. And you could say, okay, I want, X percentage of my bill or renewable. And I was like, well, that sounds really cool. And obviously that will lower my cost of energy. Actually, the next month it was twice as much. Right. I was like, no, right. I don't want to feel that good. So I just right. Let's get back to traditional energy. But it was still, expensive. So we're talking about solar panels were expensive. The technology was not there yet. And I think what changed is, well, many things. Technology became cheaper and cheaper and cheaper. Then China was the big thing. So China started investing a ton of money for, especially for solar. So the technology, like the solar panels, became really cheap.
Right.
Then, the technology was there. So it started, you could see the drop in pricing for clean energy. And then I guess it got mainstream. And there was a feeling of, I guess, after the crisis, 2008, 2009, people wanted to feel good. So let's do, this greed economics. Let's do something good. And I guess that's, if you add technology, lower prices, a big boost in China, and I want to feel good, that's when it started to get traction.
I see.
Then you see Europe with lots of investments, especially, for example, Denmark with wind. So Denmark is, the powerhouse for wind turbines, or producer of wind turbines. And I think the US started to, little by little, get into that. And, I never thought Texas will be the powerhouse for clean energy in the US.
Right.
Right. So oil and gas, and then you are, Texas is the number one producer on, wind energy, and the second producer on solar, behind California. So it's, you have both worlds, and it's interesting to see also the transition around, the traditional energy, which now they call themselves energy companies, not oil and gas anymore. So they are energy companies trying to, do some transition, some part of their business transitioning to clean energy.
And so again, somewhere in sort of the later 2000s, when we get into the 2010s and sort of this, the first decade, I guess, of the 2000s, right? Yep. You began to see this, big proliferation of consumer-related solar, not so much wind, that's always been around. Yep. That started giving the economics, a little bit more of a boost to allow for more development, proliferation, whatever. But then also enterprises started getting into it, right? Led by the sort of data center industry. So you had this sort of concurrent effect of both consumer and enterprise kind of coming together. Yep. The internet was kind of driving that. Then all of a sudden that, again, money begets money, right? So all of a sudden it's like, now we can start getting into this. So now there's wind and, ocean and all sorts of other, cool battery technologies and storage. And, we get to where we are today, and I'll come to that when we get there. But there's this sort of other thing where it just started from an investment standpoint, like, because you're also leading the way from an investing standpoint. When did you start seeing companies start to make more sense, or what companies were making sense around that time frame, late that first decade into the second decade of 2000, from an investing standpoint? Like solar started making sense, wind started making sense. Anything, batteries probably around that time frame. Anything else that you saw that was sort of about 10, 15, we'll call it 12 years ago
Batteries were not there yet. That was one of the big issues. So you have, lower costs on solar panels and the technology, but the issue was, how do you storage the energy? So it was not there yet. I guess, some of the Northern European companies started to make a big shift. Ørsted, for example, from being 100% oil company, now it's 100% clean renewable energy company. So you start. I guess it was Europe, at the forefront of the movement, and then America started getting into a bit of the trend. But I guess then is when you start looking at new business models, right? Right. And I guess one of the interesting push to get it more consumer or mainstream were the utilities. So you would be, in the case that I'm really close to, CPS Energy started, again, getting into renewable energy, solar, wind, even though it was not as cheap. My experience was, it was more expensive, but they were already testing, okay, this is going to be, something in the near future. So they started investing a lot into renewable energy. And then I guess moving fast forward, the movement that started in the Nordics with the Greta Thunberg of the world, and this big movement of Generation Z activists. One time I was in Norway, and they do the Friday strike, right? The strike for the climate, and I was Greta is from Sweden, but it was all over the world every Friday. So it was Friday. I went to the square in Norway, and I thought, maybe 20 kids protesting, and it was close to 3,000. Wow. So it was amazing. And you had the parents, the 2-year-olds, the 15-year-olds. So it was a real movement. I would say it's a real movement. So I guess that also started, the ESG, in line with the ESG movement, corporate ESG. Right. Where in the past it was corporate social responsibility and sustainability, whatever that meant. It was just, a lot, greenwashing and just putting a green stamp there. It was like, okay, I'm doing good. Right. Then you start getting the technology and the metrics. Yes. So it was not as easy to be green or sustainable. You needed, at the beginning, some metrics. And just because I want to double click and not let that go to waste, because I think that's where you really start to see the measurability, which in turn, where I think you're headed as well is, once you start measuring and publishing that data, then all of a sudden everyone starts getting into it, and then there's some competition, market forces start happening, right? Yeah. So what initially were the measurable aspects of enterprise or consumer, we'll call it sustainability? What started that? Like, for instance, I can look at the data center industry and say QE was a metric that was invented that gave rise to energy efficiencies in data centers. Was there something that you saw? Yeah, go ahead. Yeah, on my side, and having been in the investment banking and trading, financial trading, I started looking at the green bond market. So the green bond started, it's way back, but it started getting traction in 2000-ish, early 2000. And, there was a lot of around the stock exchanges, right? The New York Stock Exchange and the European, the London Stock Exchange and all that, trying to make the green bond market grow. Right. And nobody cared about the green market. So you had, a couple of issues of green bonds, and then it started evolving in terms of how do you measure the greenness of a bond, right? Okay. So you need a third party, it can't be the stock exchange or the issuer. You need third parties. So I guess that started a different niche business model, and then that's where, for example, Moody's and all these rating agencies started to do the green bond, check or approval or certification. And sorry, just for clarification, because I'm not sure everyone maybe knows about a green bond or when that happened, but can you just give a quick high-level overview? I mean, a green bond, a bond was, is money invested to do X. Right. Well, a green bond started with, some sort of project that's tied to what I call green. Again, it was like sustainability, something that's out there, not really measurable, not that straightforward, right? Right. So that's how it started. But it was like, for example, if we're doing, something that's around the ocean, right? So it's sustainable project or sustainable bridge or sustainable port, meaning you're using certain types of materials it was really loose, the definition of green or sustainable. But you will get that type of definition and then tie it to your bond, a traditional, it could be corporate bond or municipal bond or government bond. And you will put that green component or sustainable component. And then in theory, it will lower your cost of capital because it's something good, right? Right. It was not really like that because it was the same thing until you started measuring, okay, what do you mean by green or sustainable, right? Right. And that started evolving when you start getting metrics. Okay, what do you mean by green, right?
Right.
Now it's, for example, and we'll get to the circular economy, it's more measurable because it's, you start getting this sustainability, green, and then you lower to the point where you can really touch it or measure it. And so you start, the market started evolving. You got entities that will measure your greenness or your sustainability. And then the bonds or the green bonds will have a lower cost of capital. Right? And it didn't get traction until, a couple of years ago when you have this new wave of ESG, environment, social, corporate governance, corporate responsibility.
Right.
A lot to do with the SDGs. So 2015, when they started with getting a lot of attention with the Paris Accord and the SDGs. And I guess that's when corporations started really, okay, we really need to get our act together. And this is a real crisis. So that's when you see, I would say, the new wave of environment, social, corporate responsibility in a way you can measure it.
Right. And let me come back to that one too. So, because you make another comment where all of a sudden, we've been talking about, my goodness, I mean, I go back to even, and I'll date myself here, as a kid in the 70s, thinking about when in the United States, people used to throw their trash out the windows. You go to McDonald's. I mean, literally, you explain that to kids today and they can't even fathom that. I barely can remember it. It just seems so foreign now. Like, you literally would see people throw a bag of McDonald's out the window on the side of the highway or the road. And that was okay. Yep. Clearly that stopped. It took years to kind of get there. And thankfully we're now socially kind of engineered to kind of be, revolted at that, right? Which is awesome, but it took a while. So
smoking.
Well, right. Same thing, or at least get away from the fact that smoking, God forbid, when they said was good for you, got in an airplane or a restaurant where you don't have a choice, right? Go ahead and smoke outside if you want, but geez, let's not do it where you're surrounded with everybody in a hot box. But what is it with the enterprises? And I'm kind of fascinated because I think this is where this opens up to where we are in modern day. All of a sudden, measurability gave validity to the movement of sustainability. It gave validity to, I can actually see what I'm doing now. It's not some arbitrary, I just put $1 million into a bond. I don't know what that does. I don't know how. And so one, I think 100%, but then what is it now that's real that you're pointing to both as an investor and certainly an expert and advocate in this space? What's happening now that people can see, that's tangible, right? That, and I'm not asking questions. There's two parts of the question. One is, I think the answer, and I'm going to pre-answer this, is carbon math or carbon accounting, because people are very focused on that right now as sort of the thing to measure and the thing that we're fighting against. So that's one, is that become more real now with carbon math and carbon accounting, and therefore, we can actually now tie it to certain things. But my secondary question on that one is carbon the only thing from a sustainability standpoint that we should be focused on? Because I think, if I'm honest about the discussion, there's still some debate on carbon and its effectiveness, and but we're all in. It seems like everyone's talking about carbon right now. But I want to make sure that we also have the open conversation around there's probably 50 other things we could be doing to achieve sustainability or harmony with the environment. Are we also talking about those, or are we only so blinded by carbon accounting right now that we're not looking at all these other things?
No, I think, in the past, corporations were talking about corporate social responsibility, which was, I can make money regardless of how I make money, but at the end of the day, I will, give to my favorite charity. So that was what they were doing, right?
Yep.
I think there was a big shift on consumer awareness, and a lot of that has to do with technology, social media, internet, etc. Which eventually got to where we are now. Is not corporate social responsibility, but is more what they call ESG, environment, social, corporate governance, which means is not giving to charity after the fact, but how do you make your money?
Right.
So it's all the way to how do you treat your employees how do you make money? And that's another topic, the supply chain. No, are you using kits in faraway countries, or are you polluting not in the U.S. but you don't care if you pollute in Mexico or Chile or whatever?
Right.
So I guess the awareness, the shift on the consumer and awareness, thanks to a lot of social media, made the corporations, okay, we need to be real. And to be real, you need to measure, track, and then present, right? And so it was not only I do good at the end of the day, regardless of how I made money. I need to present and be transparent on how I'm making money. That means how I make my products, how do I sell, is it real? What's the transparency around corporate governance for my company? So I guess that's when it started to gain a lot of traction. And then you see, big private equity firms like BlackRock, for example, Larry Flynn, saying, hey, we need to really make an impact and we need to measure, and we will start investing in those companies that can show us, their ESG component, right? So that started a big ball of snow, I guess, into the corporate world.
Yep.
Then again, the SDG goals and the UN and the big, the World Economic Forum. Then you have all these coalitions of either environment, social, corporate governance, or and then of course technology.
Right.
You have the data, you can measure.
Right. And so with that, and let me double, and that's a really interesting point. I don't want to overlook this as well. I think you've made something an incredibly insightful comment, which is, ironically, it really was the transparency that was brought to enterprises, and I think, as you said, how they made money. That before never happened. We didn't see that company X, Y, and Z was strip mining in a certain corner of the world, which before the internet they could not say that. So no one knew that was happening. Yeah. But now that's all, everything's on display right now, that spotlight has almost forced, a reconciliation within the companies themselves to have to go, oh gosh, we can't be doing this anymore, or we can't turn a blind eye to it anymore. Like, we're being held accountable for how we make money, right? And that's as important to now consumers in who they buy from as the product itself, arguably.
Exactly. And look, you have many examples of that, like, for example, Volkswagen.
Oh, totally.
The big problem they got, with the emissions and the cheating.
Right.
And you have a ton of cases like that, where now you have social media, you have, the consumer is aware, is paying attention. So you as a corporation, they started shifting to more transparency because, not because they wanted, because they had to. Right.
It's a fair point too. It's the enterprises tend to be a little bit, you got to drag them a little bit sometimes, right? They aren't proactively doing certain things, especially in the path towards profitability. But now you're shifting their DNA a little bit. So, and this, I was going to circle back to another question, which is, so this transparency, this accountability, this visibility, which is new, that's driven by technology and the internet, right? So that's a brand new thing that didn't happen before. So that's driving, this behavioral change now, which is, we've been talking about for decades, but now it's happening. Let me go back to, again, the goal of sustainability and, things that companies are choosing to do, because we get back to this. Well, what does it mean to be sustainable? What is my end goal? As a product person, I always like to think about what's the problem we're really trying to solve. And that's when and I'm really interested to hear your opinion on this one. Like, if I asked you to define what is our human being species or global corporate objective in sustainability, what is that?
Well, I would say to do good to the planet and do good to the communities you're doing business in or with. And I think one of the interesting things for corporations is, once you start getting the push from the consumer, you need to change. You need to, if you want to stay in business. And one interesting thing happened. It used to be either you are sustainable or good in terms of how you make your products, how you treat your employees, and how you manage your company, or you're profitable. So it was like a either or.
Totally.
And all of a sudden you start realizing that it's not either or, but rather the more sustainable and social and transparent or good practices made your company more profitable. So I think that was a big shift to the mindset of at least the CEO or the board mindset, right? Where people say, well, it's not a cost. It's actually, investing in making a more profitable company. So I think it was more business oriented and profit oriented rather than let's do good. I'm not saying there are not CEOs that want to do good, but it's basically an economic.
Well, I think you hit on something again here, very insightful, which is, previously or however long ago you want to say, it was seemingly a binary or mutually exclusive decision. I can either be, or binary in the sense that I can either be profitable or I can be sustainable, right? Yeah. Somewhere in the last decade or 15 years, that's changed, right? You don't have to choose. You can actually lead with sustainability, and that actually increases profits. And we're going to come, because I think this is where we get into circular and some of the other things that are out there that are easy to do. But I also don't want to leave this sustainability at a high level, right? This is where I get into looking at, like, we know, for example, we pull out 100 and I think it's 4 or 5 gigatons of stuff from the earth every year, right? And almost split between biomass and, mined minerals and things like steel and copper to produce all the stuff that we produce. Yep. But then 8% of that is circular, right? So we're only recirculating 8% of this stuff, right? Which is like, well, how come we're not at 50% or 60% or even 30% for God's sakes, right? Like there's so much waste and excess out there. And that's very tangible and real, and it's going to bring me back to circular. But then concurrent to that is also this measurement of carbon. Like again, that seems to also be very hot right now, no pun intended, or maybe there is a little pun in there, in the sense that, people are thinking about, retained carbon and carbon math and carbon calculations. What's the carbon that goes into this building? What's the carbon that goes into this, steel girder or pipe or whatever? And so my question with that one is, and this is where I don't know enough in these sort of sustainability circles. I get it in the sense that that's very popular right now, but is that, circular to me, not pulling things out of the ground, that feels simply, that's about sustainability to me. I don't want to consume more. I want to reuse a bunch, right? I don't even care about carbon at that point. But then carbon happens to be another thing that everyone's really hot on right now. And I'm wondering, is that, sort of circular, sometimes circularity falls below carbon accounting in my conversations with people. And I'm kind of like, well, okay, I get it, but is carbon seems still a little bit academic to me, whereas circularity is real. Like it enables you to make more money. It's more tangible. Maybe it's not as sexy as carbon math or something, but it has more practical use cases. So I'm just kind of wondering, one, what you think about that. Two, why, everyone's so focused on carbon. And three, do you hear or see anything else that's sort of emerging as another category that helps us get towards sustainability?
Well, one thing that's changed the whole game is obviously technology.
Right.
So technology is being the enabler and the driving force to all this, circularity, one. And I see circularity as part of the big picture. So circularity is not, the whole sustainability umbrella is part. It's a big part of it.
Right.
But I think right now with the technology and the new technologies we have, you see a lot around carbon, for example, carbon capture. And
totally.
For example, Canada is leading with carbon capture and storage. So now you have the technology where you obviously measure, you can cut your carbon emissions, but you can also capture your carbon emissions and you can storage your carbon emissions.
Right.
And you can use that carbon as fuel for different other industries right now. Right. So, and it's interesting that, for example, Canada started doing that or leading that in Calgary or in the oil and gas region of Canada. And I see a lot, for example, starting to happen in Texas, oil and gas, right? So I guess another thing that started happening in the past is deep tech, which deep tech is basically the use of science, research and development, and many other technologies. So it's bits and atoms, right? So it's not, for example, just a new digital platform or an app, right? But rather, for example, what Tesla is doing, what SpaceX is doing. So where you have the physical advancements or physical innovation along with the tech or digital component. So it's also problem focused. So deep tech is problem focused and technology enabled, but it's not technology driven. It's problem driven, right? So that's what you have.
And so in that, sorry to touch up, because I think this is also important, and this is where that deep tech that you're talking about is kind of another way to look at how this technology, this transparency, like this deep tech allows us to get deeper into some of these kind of supply chain, where things are coming from, how things are affecting the earth, AI, machine learning, whatever you want to throw that deep tech at, it may spit out some ideas that we haven't even thought of, because now we can there's autonomy within the technology itself to actually go tackle some of these problems.
Right. Well, a traditional industry, for example, now that we're talking about the infrastructure plan or the jobs plan, you will think, the traditional infrastructure, which is roads, bridges, ports, right? And now with, the new technologies, you're talking about how can we design this new infrastructure, for example, for EVs, right?
Right.
So you need the technology component or the digital component for this traditional infrastructure. So at the end of the day, you need a hybrid infrastructure that has the digital component and the physical component, because everything is evolving. How are we going to deal with, freight EVs, right? Or autonomous freight trucks or cars.
Right. Well, and so let me again, kind of, this brings us then into the circularity. So now, kind of looking at where we are today and sort of the hot things that you're seeing. I mean, clearly, sustainability is a high-level topic. Of course, we touched that. Circularity, I want to come to that in a second. Carbon accounting seems to be concurrent to circularity, right? I mean, because circularity, we know what that is. But carbon accounting is very hot as well, to just measure the carbon footprint, right? Since that's now, for better or for worse, is, we measure that. We know if we reduce carbon, there's commensurate effect in greenhouse gases and heat, retained heat, and yada, yada, yada that goes with it. Anything else that you're also seeing kind of in that spectrum that's coming up now to tackle this problem of sustainability? Because those two are pretty, one attacks the reuse of everything. The other one is attacking specifically the carbon and carbon emissions. But what else are we talking about to become sustainable?
Well, I think you touched on one really interesting point. Carbon, for example, it used to be, again, like the big players, right? We started talking about the green bonds or the carbon credits. And so it was for the big organizations. And now you have another really interesting wave of disruption in the financial system. For example, fintech, right? You have all these fintech firms that, it's a wide, really big system, because you have payments, insurance, risk management, asset management, blah, blah, blah. But basically with fintech, you make the financial services or the financial industry that was only accessible to big players, you let that go mainstream. So I guess when you go mainstream and there's a behavioral shift on the consumer, and then it's like, for example, Bitcoin or crypto, right? If I can play in that industry or in that game, me as an individual, maybe fintech can also help with carbon markets or carbon credits or carbon trading for the masses. And so I think that's where there's a huge opportunity for fintech firms to tap into the carbon market.
Got it. And so just to double click on that for a second, because this carbon markets and carbon accounting leading to carbon markets and carbon trading, though, because you got to have accurate carbon math, right? Before you even get to the trading. But that's also then one of the things that's sort of being, but it's coming back, right? It's in vogue. Like carbon, like you said, green bonds, greenwashing, carbon markets, carbon offsets. I mean, they've been around for 20 years, but there's something different.
Standards.
Right.
So when you can measure and you can standardize something, that's when you can start making markets out of it.
Right. And so are you then also kind of looking forward now, say over the next 3, 4, 5, 6 years? I mean, clearly supply chains are kind of at the root of all of this, right? Because what are we talking about? If we're talking about any of these assets, it's in the supply chain. So the supply chains have to be tuned to start to measure these things.
Exactly.
And we're at the very early stages of that. I mean, the supply chains themselves are just, as we know, just getting digitized. As they're being digitized, it's sort of like, oh, well, let's start measuring, carbon and retained carbon from the moment that it's pulled out of the ground to its refinement, to its manufacturing, to its shipment and logistics, to its usage, to its, decommissioning, into circularity. So that's that now kind of, pushing that a little bit forward though. What else are you seeing in the horizon here? And that could be enough. That could be plenty, right? That's going to change, kind of make this more rapid, right? I mean, you're seeing new markets show up, from an investor standpoint. Are you seeing new business plans that are really kind of harnessing this stuff? Because it's not easy. I mean, doing carbon calculations is not easy yet.
Yeah. Well, again, I think you get back to standardizing how you measure whatever you want to measure, right?
Right.
So carbon, for example. I was in a conference around cryptocurrencies and blockchain, and one of the questions was like, okay, yeah, we can do all this, but it really uses a lot of energy, right? Mining and all that. Well, I don't know.
I love this question. That is one of my favorite questions.
I don't know if it uses a lot of energy because, for example, if you look at a loan from a bank, how much energy is used in creating that loan? I don't know, and I don't think maybe there's a study around that. But we don't measure, for example, how much energy is using the back office and the commercial side of the bank and all these things that you don't have in DeFi or blockchain or crypto. So in order to compare that, you need to measure it.
Correct.
So I think we're getting more and more and more measures, more standards. And that lets you, say, okay, this is the opportunity. Here are the opportunities. Here are the new markets. Mm-hmm. Because now we're talking about the same thing, right?
Mm-hmm. Mm-hmm. So do you think then, well, actually, it's an interesting question then that's inherent in that. Do you see energy calculations as when I look at my food labels now, everything has a caloric count and how many servings. And that took a while for the FDA to implement that because you didn't used to have that, right? I didn't know that there was all these ingredients and I didn't know these calorie counts. And now every menu has to have calorie. I mean, I remember that was controversial 20 years ago, right? Now it's like you expect that. I want to know what the calories are of what I'm putting into my body. Yeah. Do you then foresee energy calculations and carbon calculations? But energy seems a little bit more generic, and how much energy it takes to produce this good as a part of the kind of label that goes with the asset or the thing that you're consuming, whether it's a loan or a hard product.
I would say more than energy is what type of energy.
Right.
We already have that. For example, in the European Union, you have all these standards and you have to say, okay, how much of this came from renewable energy?
Correct.
Right? And also, for example, on certain products, you need to disclose how much of that is recycled or from new materials or used materials. So I think there's we are going to see more and more and more of those disclosures because now you can measure it and you have the technology to measure that, right?
Correct.
And it's all about transparency. And then going back to supply chain, I think supply chain is all about transparency.
Correct.
Right? And measurability and traceability.
Totally.
And now we have the technology to do that. I mean, you have things like digital twins where you can, play with your digital supply chain and see what the impact is going to be.
Right. So on that, and it's kind of looking at that. So energy, and you're absolutely correct. And again, going back, there's one measure, which is the amount of energy used to produce something, right? Which is interesting. But then you also concurrently have to ask, well, what type of energy are you using? Because I could be using, a ton of energy to produce something, but if it's all renewable, hey, okay, we're good, right? But I still might look at the energy consumption to produce something and go, I could optimize that because those are somewhat mutually exclusive. Yeah. But then we get in.
Just go ahead. Make a point. For example, when you look at the Bitcoin miners or
correct
these guys, those guys are the first invested in having clean energy or renewable energy because it's cheaper.
Totally.
So they are the ones pushing also the boundaries or should be pushing the boundaries to be more renewable energy for the data centers, for example. That part.
Absolutely. This is where, again, I think we could have an entire segment on Bitcoin mining and the misperceptions around energy consumed, and how it's consumed, because it is, I'm with you. I mean, if I take a look at a dollar bill or a quarter and the amount of energy used to produce that dollar, store that dollar, transport that dollar, I mean, and then even recycle that dollar, because even in the US, I don't think people realize is our circulation's redone almost every 7 years.
Exactly.
Whereas I mine one Bitcoin, my energy pretty much is done at that point. It's a one-time thing to produce that coin, and then it's almost zero to trade that thing. So the life cycle of a crypto, whatever currency is, anyway, we can get into it, but I think infinitely more efficient than anything paper-based or metal-based. But let me come back to now circularity, because this is again where you've got enterprises getting into it. They want the accounting, they want the transparency, energy consumed, got it. Carbon math, okay, let's add that in. But then we get back to circularity, and it's like this is another one that I don't even need to know the energy. I don't even need to know the carbon. Why aren't more companies embracing circularity? Or is that another trend that you're starting to see kind of change a little bit too, right? Because that seems to me like I don't even need to know this carbon and all this other stuff. If I'm doing more circular, I mean, it's just good for everybody. And by the way, I'm also being a lot more profitable.
Exactly. Yeah, I think it's not. They were asking me that is this a fade is going to fade away? I don't think so. I think circularity is an economic and financial and business case. So there's a business case for circularity. I think in the case of the US, or let me go back. In the case of Europe, it started with historically, more dense cities, scarcity of resources, the war, blah, blah, blah. And so they're more aware in terms of use of resources or materials. Whereas in the US, it's a huge country. We never thought we will run out of anything. Not in Texas, right?
Right.
But then it started making business sense. It's not only let's take care of our resources, but it could also be a profitable, venture, right? So I guess once you start seeing that it's not the dichotomy of profitability versus sustainability, or I have to take care of my resources even though it's not as profitable. When you get that myth away, I think in the US, you start seeing a lot of people saying, hey, this could be a really interesting business. So if I get into circular economy business model, which are many, I can make a lot of money. And that's where you see, and you have the technology, right? So that's where you see, for example, marketplaces or platforms popping all over the place. At least in paper, it makes business sense.
Totally.
Financial sense, right?
Totally.
I mean, obviously, you have to get to the point of you're big enough, but the technology is there to scale, right?
And do you think then, looking at circularity again, so you got circularity, you got kind of this carbon accounting and traceability of and then also just energy used to consume or produce something, and then the sources of energy, fairly simple buckets, right? Is there anything you see also that's a little bit that's not one of those, that's also in the realm of sustainability? And I'm thinking, for example, one that we don't talk a lot about, but in the realm of sustainability is the reemergence of nuclear power, right? Yep. I mean, it's an energy source, but it's almost a separate conversation where we have to kind of re-educate people on the literal cleanliness of nuclear
Yep.
and how much different it is today than it was from 3 Mile Island, which still is the scar that everyone kind of holds on to. Oh, dirty nuclear. It's like, yeah, that was almost 50 years ago now, and things have changed a lot.
Yeah.
So nuclear is one of those ones that I think is kind of bubbling about. Anything else that's out there that you see? Because you've got a really unique view on this that's new, that most people haven't heard of.
Well, I think not in terms of a new energy source, but I guess how you use energy. So, for example, lots of advancements in, for example, the smart grid.
Okay,
lots
right.
of research and not just research, actual projects around the smart grid or decentralized energy.
Yep.
Where you're a consumer, but you're also a producer, and you can make money out of it. So you can be, depending on where you are, you can consume and produce energy, and that opens the door to new markets, new marketplaces of trading energy between you and your neighbor, for example. It's huge, for example, for the REITs, the real estate investment trust, for example, the portfolio of buildings they have. Imagine if you can trade your energy between buildings or between portfolios of buildings. And I think the big one is, again, storage. Storage is going to be really a game changer. It's being a real game changer. Because now you can, it was like, okay, you produce solar, but how do you, what happens at night? It was the typical question, right?
But I think you're raising a point, and that's kind of why I asked the question. So I hadn't even thought about it, but storage is a big deal because, one of the things that we waste a lot of is energy.
Yep.
Whether it's in transmission or, through non-use, or to your point, now all of a sudden, if I'm turning every home into both a consumer and a producer of energy through solar panels or wind or other energy things that I can produce in my local area, how am I storing that energy so I can feed it back into whether it's my neighbor or the grid itself? And
school buses, for example.
Yeah. Okay.
School buses, 90% of the time, school bus is idle. It's just sitting. So that could be a battery. I mean, there's already that. And in the jobs plan, in the infrastructure plan, there's a bucket for school buses, for example. So you have batteries there.
Interesting.
That could be parked in their, power factories.
Absolutely. Well, okay. And I just looked at the clock here and I realized an hour has come and gone already. So let me kind of just be conscious of time a little bit here and respectful. So kind of, it's kind of winding down a little bit, but now looking forward, like what are you coming out of the pandemic? It's 2021. Let's say we're moving to 2022, 2023. Kind of putting your forecasting hat on, what are you getting excited about from your view in the world of sustainability and or investing, or both, right? Like what's over the next couple of years you really think the hot stuff?
Well, I'm really, really excited about the circular economy.
Right.
So I think that's just starting. I mean, you see big companies getting into for example, the auto industry, the big players like Unilever and all those guys, Walmart, the big guys of the world. Apple, for example, is really getting that, all the tech companies. So I think the circular economy is just starting and is going to be really, really big, especially in the US. It's gaining a lot of traction. And Cleantech. So Cleantech, anything that the definition of Cleantech is, I mean, you could talk about clean energy or renewable energy and everything around that. Water is going to be huge. Anything that makes supply chains cleaner, if you will, or more transparent. So Cleantech is I think, also going to be huge.
Well, you touched on one that I also don't want to lose sight of, because I think I'm going to put a footnote on this one, and a big asterisk bold here is water consumption. We spend a lot of time talking about energy and carbon and greenhouse gas, but as big of an issue, here is water. Right. And fresh water, potable water, water for crops or whatever. And I don't know if that has enough visibility right now, but that's a giant gaping, seeming to me, issue in the sustainability world that's not as prominent as, say, carbon.
Yeah, it doesn't have the visibility it should. I mean, you talk, for example, there's a lot around oceans, but it's more about polluting the ocean with plastics and stuff like that. so again, it goes back to plastics.
Mm-hmm.
But water, I think it's going to be massive.
Right.
You start seeing different, for example, regulations and laws changing around the water in the US, for example, or starting to.
Yep.
So I think water is going to be massive in terms of how you use technology to, manage water systems, trade water, which is another market there's not a trading market for water, established. And I think that could be really interesting with the right technologies.
Absolutely. And I would go, one that I'm a little familiar with is like desalinization.
Yeah.
Some of the technologies to take existing water, i.e. salt water, and convert that into potable, human or, animal-based water consumable, right?
Israel is doing amazing stuff around technology.
Right. Yeah. Right. Awesome. Well, listen, this has been, as I knew it would be, fascinating conversation, could keep on going. But I think there's just so much in here to unpack and go into. So, just want to thank you a lot for hanging out and chatting for a little bit, bringing your expertise in here. And, we'll be doing more of this, but, and I think also you hit on some just, even coming towards the end here and talking about water is another one, right? Hadn't even really thought too much about that. And I hope people think about that, right? We get caught up in a lot of the enthusiasm around, sustainability and carbon and, green and all that sort of stuff. And over here is this water conversation. Like we got to bring that up a little bit.
Maybe we should do that. Maybe do like a small panel of people that from Finland and Canada, which is
totally
the world.
Totally. Absolutely. But anyways, thank you so much. Really appreciate it. Have a wonderful time and we'll be talking soon.
Thanks, Richard. My pleasure.
Thank you.
Take care. Bye.
This is Richard Donaldson. Thanks for listening. If you have any comments about the episode or topics in supply chain you'd like us to explore, we'd love to hear from you. You can reach us at supplychainnext@requus.com. And while you're at it, why not check out the Requus platform at supplychain.requus.com. Requus allows you to manage the full asset lifecycle in the cloud, collaborating with your entire value network to buy, manage, and sell your assets. Find out more at www.requus.com.